Real estate investing tips from a multi-millionaire. You know why most people who try to invest in real estate never get anywhere? It's because they're all following the same tired playbook. They're told to save up a huge down payment, scroll endlessly through Zillow, and cross their fingers. I built a multi-million-dollar property empire from scratch by doing the exact opposite of what everyone told me to do. The truth is, most aspiring investors are playing the game completely wrong. You've heard that real estate is the path to wealth, but you're stuck in analysis paralysis, terrified of losing money, and have no idea where to actually begin. So, today I'm giving you the 5-step blueprint that truly separates the wealthy investors from everyone else. This isn't fluff theory. These are the simple but advanced strategies I use to build my portfolio. I even handed this blueprint to 3 brand new investors. And honestly, their results were staggering. Stick around to see how they pulled it off and how you can too. The blueprint, the 5 simple pillars of a property empire. Look, this whole system boils down to 5 pillars. Get these right, and building your own property empire becomes almost inevitable. All those gurus love to overcomplicate it, but trust me, it's brutally simple when you break it down. So, where do we start? Pillar 1, the money multiplier. Mindset. Before you even think about looking at a property, you've got to fix the 6 inches between your ears. The real difference between wealthy investors and everyone else isn't their job or their income. It's their entire philosophy on money. The average person focuses on earning a paycheck just to spend it. Their biggest financial goal is buying a home to live in. Wealthy investors, they focus on one thing and one thing only: scooping up assets that generate revenue, often without their constant effort. To them, a property isn't a home. It's a business that should put money in their pocket every single month. Appreciation is just a sweet bonus, not the main event. This is what I call the money multiplier mindset. You stop thinking, how can I afford this property? And you start asking, how can this property afford itself and then pay me? You have to stop thinking like a consumer and start thinking like a bank. When you have $1, you don't think about what you can buy with it. You think, where can I send this dollar so it comes back with friends? Every property is an employee, and its job is to make you more money. My very first deal was a small duplex. The bank just saw a liability, a loan. I saw a cash machine. I used a strategy called house hacking, living in one unit, while the rent from the other unit paid my entire mortgage. I was living for free. But more importantly, I'd created a system where my biggest expense, housing, was now zero. All that freed up cash, that became the seed money for the very next deal. This mindset shift is the foundation for everything. Pillar 2, the deal finding. Secret, listen, the real money-making deals, they aren't sitting on the public market waiting for you. While you can certainly find good deals on market, the pros know the real gems are often found before they hit the mainstream. These are called off-market deals, where you find motivated sellers who value speed and convenience more than squeezing every last penny out of the sale. So, how do you find them? The secret isn't some $1,000 software. It's being clever. One of the most powerful old-school methods is driving for dollars. You literally get in your car, drive through neighborhoods you like, and look for houses that look a little sad. Overgrown grass, peeling paint, mail spilling out of the mailbox. These are clues that the owner might be distressed and willing to sell quickly. When you spot one, you don't just drive by. You jot down the address, look up the owner, and you reach out with a personal handwritten letter, not junk mail. Just a simple note saying you're a local buyer and asking if they'd ever consider an offer. Another pro tip: make friends. Network with local wholesalers, real estate agents, and even divorce or probate attorneys. These people are the gatekeepers to deals. Wholesalers are experts at finding distressed properties, and attorneys often have clients who need to sell an estate fast. Tell everyone you know that you're in the market to buy. You'd be shocked how many deals fall into your lap just because you're the first person they think of. Pillar 3, the creative financing technique. All right, let's talk about the thing that stops almost everyone in their tracks: the money. You've been sold on the idea that you need a 20% down payment to buy an investment property. That's the slow lane. wealthy. Investors use leverage, and one of the best systems for this is a strategy called BRRRR. Buy, rehab, rent, refinance, repeat. This thing is a complete game changer for buying properties with very little of your own cash tied up. Here's the breakdown. Buy. You find a fixer-upper, usually off-market, and buy it using short-term financing, like a hard money loan or a private loan. You're not going to a big bank for this first step. Rehab. You renovate the property to massively increase its value. This is what we call forced appreciation, and we'll hit that next. Rent. You get a great tenant in there, and suddenly you've got cash flow. Refinance. Now, here's where the magic happens. You go to a traditional bank. Because the property is fixed up and rented out, it's worth way more. They give you a new, long-term mortgage based on this higher value, which pays off your initial loan and, get this, often gives you all of your original cash back. Repeat. You just pulled your initial investment out, but you still own a property that's paying you every month. You take that same pile of money and do it all over again. I used this on a fourplex years ago. It was a wreck we bought off market with a private loan. We fixed it up, filled it with tenants, and walked into a local bank. The appraisal came in so high that the new loan paid off our lender, covered all our reno costs, and we literally walked away from the closing with a check. We owned a cash-flowing asset with $0 of our own money left in the deal. That is how you scale. Pillar 4, the forced appreciation engine. Amateurs wait for the market to make them rich. Pros don't wait. They force appreciation. This is how you crank up a property's value with your own two hands, making the BRRRR strategy pop. It's not about crossing your fingers and hoping prices go up. It's about taking a property and actively making it worth more. This doesn't always mean a crazy expensive gut job. Your biggest bang for your buck? It's almost always kitchens and bathrooms. Even simple cosmetic fixes, a fresh coat of paint, modern light fixtures, new cabinet hardware, can totally transform a space and let you charge more rent. Another powerful move is to increase the property's income. Can you finish a basement to add a legal bedroom or convert an old dining room? In many places, you can even build a small rental unit or ADU in the backyard, basically adding a second stream of income to one property. You can also force appreciation by slashing expenses. By installing energy-efficient windows or low-flow toilets, you lower utility bills that increases your net operating income, NOI. In the world of multifamily real estate, a property's value is directly tied to its NOI. Every single dollar you save on expenses can add 10, 20, or even more dollars to the building's total value. It's a guaranteed return you control. Pillar 5, the scale and systemize. Method. One property is a hobby. A portfolio is an empire. The final pillar is about using your momentum to go from one deal to dozens. And the secret weapon for this is a little piece of the IRS tax code called the 1031 exchange. A 1031 exchange lets you sell an investment property and roll all the profits into a new, like-kind property without paying a dime in capital gains taxes. Instead of handing a massive chunk of your hard-earned equity to the government, you reinvest 100% of it. Here's what that looks like. You buy a duplex for $200,000. A few years later, it's worth $350,000. Instead of selling and paying taxes on your $150,000 gain, you do a 1031 exchange. You use the entire $350,000 to buy a small apartment building. You just traded up and scaled your portfolio without losing any momentum to taxes. You can do this again and again. I use this strategy to roll a few small houses into a portfolio of dozens of units. It's a true snowball effect. Then, get this. Under current law, when you pass on, your heirs can inherit these properties at a stepped-up basis, which can legally erase the deferred tax bill on all that growth. It's wild. Of course, tax laws can change, but for decades this has been a cornerstone of building serious wealth. But you can't do this alone. Trying to fix toilets at 2 a.m., you'll burn out. To truly scale, you need systems. You build a team, a rockstar contractor, a great property manager, a sharp accountant. You leverage their skills so you can stay focused on finding the next great deal. Your goal is to build a machine that runs without you. And that's it. That's the playbook. It starts with the money multiplier mindset, so you see property as a business. You use the deal-finding secret to find opportunities no one else sees. You use creative financing like BRRRR to buy them with less of your own, cash. You use the forced appreciation engine to create value out of thin air. And you use the scale and systemize method with 1,031 exchanges to grow exponentially. This is the blueprint. It's not magic, and it's not a get-rich-quick scheme. It is a proven path, and it's completely achievable for you if you're ready to ditch the bad advice. Look, if you're serious about not just buying a property, but actually building an empire, I want to give you something. I put together a free case study on my very first deal. All the messy details, the numbers, the mistakes, everything. The link is right below in the description. Go get it. Thanks for hanging out. Now stop watching and go build that empire.